Testnet is live, people. Oh wait, Ethereum's live. Oh wait, you can yield farm on Ethereum. Uniswap version 3. Check it out. I mean, maybe go have a read on the Uniswap website. Basically explains liquidity pools a little bit better. I don't actually understand 100% how the trades are created beyond code that's executed. See, there's a bit of a gap there. But simply put, if you have a liquidity position in Uniswap, you might be able to earn yield. Now, say that you wanted to take part in Hex and you didn't want to just buy Hex directly and stake it, for whatever amount of time. Maybe you felt a little bit more advanced and maybe you wanted to provide some liquidity. I guess the best way to look at it is to understand that there is such a thing as impermanent loss on one of the sides of the coins that you're investing in, or tokens, sorry. And for instance, with this pair, like a USD Hex pair, or even say a USD DAI pair, there's not going to be much movement with those two, so impermanent loss is quite low. The risk is pretty low for that. But with a pair like Hex, I guess the risk is a little bit higher for impermanent loss. Therefore, you might want to take into consideration what could be the future outcome depending on the price movements between these two. Now, one's stable, so it's relatively safe, and the other can fluctuate like all cryptocurrencies. So you actually have an opportunity to gain some yield, if you see here, monthly or even yearly on quite a small amount. And the funny thing with this is, if you think about it logically and you understand it, if the price of Hex goes a lot lower, goes maybe out of price range, I've got an example here, that's what the this website pulled up. Basically, if it goes out of the range, you don't earn any of these fees. But if it stays within the range, once it trends closer towards, say Hex goes down lower, basically you have more Hex within your position. So when you think about that, that might actually be an okay thing, because if you assume that it might go up in the future, then maybe, just maybe, you're okay with that. The opposite is true. Say it does increase and the price spikes up, and you then have less Hex holdings and you have purely USDC almost. Again, you might be okay with that because you might have earned some fees along the way, and then say it goes out of range and you decide to remove your liquidity. There's many obviously options and decisions to make, but that's just a simple option. Say you remove your liquidity at that point and you then are left with a large almost the same amount of USDC. Again, that might be okay because you've invested your amount, and if you're okay with that in purely USDC, then you might want to rinse and repeat, who knows. But again, it's something you might want to consider, because I was looking at it, the markets more broadly, and this was really weird. The signaling from JP Morgan, basically the boss of JP Morgan, has warned investors of the likelihood of a downturn in the US economy, saying that something worse than a hard recession could be on the horizon. Now, if you think back to the negative yield curve, if you understand how that works, and we saw just recently markets in China actually lowering rates, reinforcing that theory that negative yield curves could take place. We see possible signaling from this article, basically from the boss of JP Morgan, indicating something worse than a recession. Now, what would that be? If you think what is worse on a chart than a recession is actually a depression. Now, whether or not it's a long form or a short form, I'm actually not too sure, because we do see the definition of a depression in Investopedia is depressions are relatively less frequent than milder recessions. They tend to be accompanied by high unemployment and low inflation. Now, at the moment, some people might think that sounds stupid, because we all hear about the high inflation. But in a time where we have increasing prices, increasing inflation because of inflation causing the prices to increase, and we see rates increasing at the same time, what is the opposite of that? So what is going to take place once the monetary policy flips on its head and it goes from being inflationary to deflationary? Deflationary is when you have low inflation and high unemployment. So if you're in a sector that does experience this, because generally when negative yield curves take place and you have less money, you're not as comfortable with, because you're seeing people around you earning less, maybe because their business is not hiring as many people, maybe they're being let go because the prices are lower and the amount of net revenue that they can earn is lower, hence a depression. This is pretty logical, but I'm not sure people are understanding this. So I thought, if you tie that into cryptocurrency in terms of something that can earn you, well, obviously the staking aspect. Imagine, for instance, the price of HEX does decrease, you're holding a liquidity position, you end up with more HEX. Should it go out of range, you'd be sitting on a large amount of, say, HEX in this particular case, and you could then, stake that HEX and actually put that into, basically, it would be worth less because you'd be timesing, the amount of HEX you have based on the current price, and if it keeps dropping, you could be left holding HEX, which is worth less than your initial investment. But then, of course, you have the option with HEX, because of its innovation in this space. We see basically the ability to send your tokens to a burn address, literally burn them, so that locks in actually a loss. Then, should you serve your time correctly, you would then be, and you decide to mint your tokens, freshly mint them from inflation, after holding your T-shares, you then would be minting them into inflation. Then, should you choose to sell them, you can work that out for yourself. So that might be, believe it or not, a good thing when you think about it, because had you've been doing this for, say, this long period of sort of range trading within the HEX cryptocurrency price, and you were, say, providing liquidity, and you were within range the whole while, and you were staking, so you're not all just in liquidity, you're not just always in staking. You might have a portfolio percentage mixed up. It might turn out to be a profitable thing for someone, for an entrepreneur to have a look into. Again, this is not financial advice. I'm merely pointing this out. I'm not sure what happens if more people do engage in liquidity providing. I'm not sure if the yield drops off. Time will tell. I'm not sure how many people will actually listen. What else? So we have signaling. We have a potential counter to signaling, because bear in mind, if there is a recession, going back to legacy markets, recession, or extended depression, and you actually have something like cryptocurrency to counter that, because you're luckily enough to hold something like HEX, which has the ability, like I said before, you can stake, you can provide liquidity, probably not preferred over staking. But again, you can see potential benefits if the prices swing one way or the other, and you're paired with, say, a stable or some other coin that you may want to hold. But again, in a market where, say, everything's falling, do you really want to be holding two one bag of something else that's completely falling, or one bag that's stable and one bag that's increasing. What else? Hopefully that made sense. Yeah, there's a fair bit of signaling going on. I missed it. I'm only looking at it today. I missed making a video the other day, basically because I was monitoring icosphere and how that is all going, and that's, you can go on chain, have a look for yourself. That is pretty cool. I like it anyway so far. It's like day 2, people. Now we have the signaling. The signaling is very concerning. Quite often though, what someone says is different to what they're doing. So when you see people analyzing successful investors, they might be saying the sky is falling, and turns out in the background they're buying up that particular asset that the sky was falling on. So have a look into that. I haven't heard or analyzed that further, but all I can see is it's not. Once someone of this caliber does mention that potential worse than recession could be coming, and you look into how generally indicators that can trigger that tend to be successful in calling recessions and things like that, like the yield curves, and if there's liquidity crisis in the economy, even I guess the price of the dollar in terms of the never-ending printing of the US dollar, so causing this unfortunate decline in the purchasing power of the US dollar relative to its initial release. It's down and to the right, starting from up high, which was actually only $1. Okay, so moving on to crypto, we have it's becoming more mainstream, more accepted when governments actually will want to confiscate your crypto if you're not paying your traffic fines. Now, I'm only reading this now. I should have had looked a little bit deeper before making a video, but doesn't matter. Let's have a brief skim over this. Let's have a look. South Korean police have been given experimental, so it's all the pilot people, experimental new powers that allow them to seize crypto from people who refuse to pay fines. Now, that's kind of sucky. And have already taken tokens from a citizen who failed to pay. Okay, so it's not just proposed, it's actually taking place. Excuse me. It basically calls it a cryptocurrency asset seizure. I'm not actually sure how they would do that. Oh, here we go. Remember... You remember, I don't know if you've been in this space for a while, but when someone says not your keys, not your coins, that's not just like a saying. It's actually the truth, and this just demonstrates it even further. So apparently in South Korea, you don't pay your speeding fines or whatever, and an investigation takes place, and it figures out that you have cryptocurrency on a domestic exchange. It may allow them to freeze wallets. Wow. And freeze wallets, there you go. And gain warrants to allow them to seize coins. What the actual fuck is this Orwellian nightmare that we're sleepwalking into? We're seeing the banning of software, what next, the internet itself, and now we're seeing powers, experimental powers, mind you, that allow the power to freeze wallets and gain warrants to allow them to seize coins. What do you mean gain? I'm assuming this means if you hold cryptocurrency in your wallet on an exchange, because that's the way I am reading it. That is absolutely insanity. Seize and collect. That's a grey area. We might need to watch this one a little bit more closely. So you don't pay your fine, you got crypto on an exchange. it's found out, it's pretty easy to find out if you're a crypto on an exchange, and it's like a large amount. The seize and collect powers kick in, and it's not clear whether they're actually just liquidated or seized. So maybe the South Korean government wants to hodl some cryptocurrency in a potential downturn based on the signaling from JP Morgan boss, signaling something worse could be coming. Not your keys, not your coins. How do we avoid this? Well, we could, purchase Hex, and you could provide liquidity. You could stake it. You could just hold it and see what it does. You could use the liquidity pool tactic to basically get more Hex as the price drops lower. Then you could also have the price, if the price goes up and you're holding Hex, like further Hex, more Hex in another wallet, and you see the price go up, you're not probably going to mind if a little bit is lost. And when I say lost, is basically you could have just held USDC for a particular amount. You see another amount in another wallet go up a little bit, it might not phase you that you missed out the opportunity cost on that existing Hex. That wouldn't take place if you were staked. So then you can see the sort of games that one could play to try and counterbalance this Orwellian nightmare that we're sleepwalking into. It says here, crypto hacking theft is on the rise. Again, keep your security up to scratch, people. And it says darknet markets are retreating. Wow. So yeah, whatever that means they're referring to there. And then in closing, I thought this was a bit of a funny article that came out. Basically, there's a tweet about buying a football club, and the fans were really protective of their club. Where have I seen this before? What next? Maybe anyway, I think Hexagons will understand what that one's about. So in closing, I think that's pretty straightforward. Basically, you might want to look into providing liquidity, because you can do it on the testnet, or you can do it in the real world. I use one of these calculators basically to give off a rough figure, and maybe you could plan out something. Again, just make sure you understand what you're doing, because it should something take place and Hex just goes up and to the right at an extreme rate, and you're not monitoring your position. You might log on thinking you've got all this Hex, and it turns out you've actually got a lot of stable based on your entry and amount of liquidity that you did provide. Now, the alternative is true. You might log in and you've got a whole lot more Hex, but it's worth a lot less now because the price has gone down. So, you might want to just check that out. I'm guessing you know how to stake Hex. I mean, the core function of it. And it's really good to see it's a thriving system whereby you enter into a stake, you're burning tokens, you're minting tokens. There's so much activity all on chain that you can see, and at the same time you need liquidity providers to back this up. And then while this is going on, we're actually seeing in the market some pretty bearish news, to be honest. So maybe the separation somewhat from the bearish news into cryptocurrency could take place. Probably more relevant to Hex and the Richard Hart ecosphere. But yeah, it's very, very interesting to see this sort of signaling at this particular time. I'm not sure what their system is picking up, but it might be similar to many other people who can see there's problems ahead that we are blindly sleepwalking into an Orwellian nightmare, and generally out of chaos. It makes it easier for people to be put into a place where they're more controlling, more subservient. One particular topic there is we saw what happened when there was a pandemic and the word that we cannot speak. People just threw away their freedoms. It was quite sad to watch. In closing again, I just can't stress enough that the decoupling from the Richard Heart ecosphere is probably going to take place, if not already, putting hexagons in a place of potential abundance, financial freedom, and basically the liberty to choose over this Orwellian nightmare, which could allow you to have your cryptocurrency seized should you have crypto. I loosely use that term crypto on a third-party exchange. Yeah, so should you have crypto on a third-party exchange, I don't know why I put bunnies behind third-party exchange. Should you have your crypto in that sort of system, not your keys, not your coins, you might see yourself having wallets frozen or having them seized. Now, I'm not sure if they'll go further and see where you are sending your wallet, your coins to, assuming anyone even does that, because maybe people don't understand what cryptocurrency is, can be for, you know, like your own keys, your own wallet, etc. Anyway, that's enough. I've rambled on a lot. Yeah, I can't believe this one, man. I'm pretty sure maybe Musk saw something similar. I don't know. That one's a complete conspiracy. All right. Signing out.